What's up, YouTube? Are we going back to 1990s interest rates? To answer that question, I actually went to the Goodwill the other day to get the most 1990s tacky shirt to talk all about the latest interest rate hike. What does this mean? Are they actually having the right effect? And how should we move forward as a real estate investor? So let's jump right into those conversations here and get you all the answers that you're looking for. All right, gang. So here we're gonna be talking about the interest rate hike. And if you can make it right to the end of the video here, please at least give us a like, give us a subscribe for me having to wear this super tacky shirt that I'm gonna be re-donating back to the Goodwill and losing money on. So in case you weren't paying attention, on October 26th, the Bank of Canada raised interest again here for us by 50 basis points, or 0.5%, bringing the prime rate up to now 5.95%. Are they done yet? I don't think that they are. Most economists are calling for a couple more interest rate hikes at least, but at least they're calling for a much smaller hike over time. So 25 basis points, which will bring us probably up more into the mid sixes. And that's what I was paying when I bought my first property back in 2005. I was house hacking in my sixplex and I was in the fives for my interest rate back then. And this is going to be the highest interest rate that we have seen in the past 30 years. This is sort of like a once in a lifetime lending opportunity, is what they've been saying in the news, that if you have a mortgage for 25 or 30 years, this is the highest interest rate that you've seen over that period of time. But the real question is, are these interest rate hikes actually having the effect that they want them to? To answer that, we need to look at inflation. Right now, the inflation numbers that we're working with were in September. The inflation was at 6.9%, which was an improvement over the month prior, which was 8.1%. Now, the next date to be looking in your calendar, I believe, is going to be November 2nd. That's when they're going to be releasing the inflationary data for the month of October. That's going to be an interesting one to see. Hopefully, it's going to come down again, and these interest rate hikes are going to be proving their weight in gold that they're actually getting the effect that the government wants to have. But how many more interest rate hikes do we need to have for this to start slowing down? And you have to look back at the historical data when it comes to inflation to see what the government has typically done in this situation. And the target, or the key number that they want to be hitting, is getting it to 4% inflation or less. That's when they're going to stop doing all this crazy tightening. They will slow down, they'll flatline it, they'll be taking more time to analyze how the economy is doing and then make more changes from there. Okay, the ideal target is actually more like 2% inflation. That's what we've had historically over long periods of time. Back when real estate investing was not the most sexy thing in the world, you'd be getting smaller inflationary appreciation rates, right? 2 to 4% is what I was used to for a long time. Real estate was kind of boring. Not as many people were interested in it. So that's what they're trying to do here. The next question is going to be, what does this all mean for us real estate investors, and what should we do? So I guess this means that you should be proceeding with caution. Buying a property is actually a big responsibility. It's not just everybody's right to have a property, although we're going to be talking about Doug Ford and what he's going to be doing for housing here in Ontario, which will be another video. But you have to keep in mind that these are big numbers that we're dealing with. And if you're not prepared to put on your big boy pants or your big girl pants and deal with inflation and higher interest rates, then you shouldn't be getting in the game anyways. All the dabblers and all the speculators, people who thought real estate was great, like Bitcoin or something like that, going up like crazy, have now all left the party, and it's just the serious people here having this conversation. So I'm glad you're here today so that we can dig deep into this. But what it does mean, though, I do believe at my true heart of hearts that there will be still opportunities out there, and it's going to be up to you to make that decision whether you're ready to pull the trigger on them or not. So, will real estate be higher in 5 years or even in 3 years? My answer, I believe, is yes. If you get in now, it will definitely be worth more once the economy recovers. And when we look at interest rates, I really do believe that we've been going up on this roller coaster ride here, hike after hike after hike. If you haven't seen some of the other videos, go check out the 1% hike video. But I believe that we're going up, and we can only go up so much further before we flatline a little bit, wait for inflation to hit that 4% or lower target, and then they'll start to ease off. We will get back into that 3 to 4% range in the not too distant future. Is it going to be in 8 months, 12 months, 16 months, 18 months? We will see, but it's not going to stay this high forever. So for people who do think that we're going up to like 9, 12% interest rates like our parents had, what I grew up through, I'm not totally oblivious to what interest rates have done, okay? I've seen my parents struggle through different times. It was always a conversation at the dinner table, and the stress was definitely apparent, but things were totally different. It was a totally different economy. The prices of homes were much different back then. You could just put your head down, work harder, work extra overtime, and pay off your mortgage in literally 3 to 5 years if you weren't happy with the interest rates. Not so much the case these days, all right? The prices of homes have skyrocketed up to 7 to 12% of what people earn every single year. It's a totally different game. So what are the strategies that are gonna work for real estate investors here that you should be tuning into? I'll give you some here that you can work on, all right? So buying a property right now still makes a lot of sense if you're willing to, number one, house hack it. Okay, you gotta be doing these house hacking methodologies when you're young so you can try to live for free or close to free, just keeping your cost of living down so that you can be saving up more money for the renovations and repairs and things that are gonna be required of that property. You could be doing short-term rental or a medium-term rental. I'm a huge fan of this. If you haven't seen some of the content on my YouTube channel, go check them out. But we've got lots of videos here about my furnished rentals. I've pivoted about 15 to 20% of my portfolio to furnished rentals, and I like medium term. To me, it's that sweet spot of the least amount of management for the most amount of cash flow. You could also be doing things like student rentals. People aren't really talking about student rentals, but I think it's kind of a sleeper opportunity that people haven't tuned into yet, because a lot of this good student rental stock was sold off during COVID, and that stock isn't coming back. They sold them for lottery day type prices, and now students are all back to school, and we need to make sure that we have units to rent them. So student rental prices have gone up, and for people that are willing to get into that game, make sure you're trained and that you know what you're doing. Go link arms with other people that have done student rentals before so that you can thrive in that environment. Those are just some strategies that are gonna work here, but make sure you're getting a banger of a deal. You should be getting vacant possession. You should be getting extra value in the property. Some of our students have recently bought properties where there was double lots and they could sever off that lot, sell it for profit, or just keep it. It's like icing on the cake for when they want to develop that lot. I guess for now they're just gonna have to pay for extra grass cutting, but there are gonna be some great deals out there. Does everything sell on MLS? No, there's definitely properties that sell off market all the time if you know how to do it. If you want to find out more about how to find off-market deals, you can reach out, send us a DM, fill out a coaching intake form, and we can have a conversation about that, let you know what we do in our inner circle. But there's definitely going to be distressed sellers that need to sell properties. Are wholesalers still finding deals on properties? Yes. Are their assignment fees lower than they used to be? Of course they are. So there you have it there, folks. Are we out of this mess here yet? No, we're not, but I really do feel that interest rate hikes are going to start to slow down. They're going to be lesser in severity. At least we didn't get the 75% basis rate hike that they were potentially calling for. Tune in on November 11th, I believe, when the United States are going to be getting their interest rate hike, so they can feel a little bit about what we've been feeling here. They're calling for 75% basis points over there, but we got started a little bit sooner. Let's hope that we can get out of this mess a little bit sooner. So there you have it, gang. Until next time when we drop another video, please give us a like, give us a subscribe, drop a comment below with where you think that interest rates are going, and we'll catch you on the next one. Bye for now.